All right, so obviously always so much going on out there just in general overall economy market, but I kind of wanted to just get back to the basics here. Quick little interview with Bill Poultry of what's going on with Fannie and Freddie. And the reason why I always speak about Fannie and Freddie is that is like the foundation. A lot of people guidelines are based off Fannie and Freddie. Even a bank that might be a portfolio bank, they'll do a lot of their guidelines off of Fannie and Freddie, then make, okay, we'll allow this, we'll allow that, but it's the basis of everything and who they use for credit and how they price loans and how they look at things and all that. So one of the big things right now with Fannie and Freddie, and one thing I like about Bill is he is getting in there. He's just bringing common sense business practices, just get back in there, make a mortgage more affordable, have competition, get in there and see where people might be ripping off, take advantage of the consumer. Can we use technology? Can we make things better? So just want to jump in, listen to this quick conversation, talk about it, because a lot of people don't listen to this guy ever. But what are some of the things he's doing, talking about really where they're focusing on to bring more affordability to housing? And why this is important is because, you know, you're getting a credit report and people are paying $100 plus per credit report, or even how the bureaus report credit. You know, somebody has an 800 credit or 700 credit or 680. It's just very strange. It doesn't make sense. And I've been doing this a long time, and, you know, it'd be nice if we just bring more technology, more competition, and just more common sense into the whole thing. So, all right, guys, so that's Bill Poultry. He is running Fannie and Freddie now. So if you've never heard of him, definitely pay attention. If you're in the housing market, care about the housing market, care about rates, this person obviously in charge of Fannie and Freddie. So he has gone in there, cleaned house, brought everybody back to work. They are cracking down on certain things. You'll hear me videos say cracking down on owner occupancy fraud. They're just cracking down on, there's obviously bad people in Fannie and Freddie that were giving probably deals and getting paid off for stuff with certain lenders. And so they're just trying to clean up house. But his biggest thing right now is obviously, as you guys know, we went through a time where we were very spoiled. Interest rates were in the high ones and the twos and the 3%. And a lot of you guys got to take advantage, whether you bought a home, refied a home and all that. And it was great. But ever since then, it seems like everything else in life, whether it's food, whether it's going on a trip, whether it's getting a refi, whether it's anything, prices have gone up. That's including credit. So he is just trying to bring awareness to this. He's trying to call out CEOs and other people, say, well, figure it out, do something, cut the cost, come up with something different. And one of the things was the FICO scores. Is there another way to look at FICO score or credit scores? Why are we looking at everybody the same, right? So what you're seeing is just use your brain, utilize technology, and just use different things that make a huge difference in the overall business when it comes to getting a loan. And so that's what you're going to keep seeing, is things like this over and over. The reason why I want to make this video is obviously I'm trying to bring stuff new and different to you guys that are watching this, but one of the things that is really going on behind the scenes that we're not really hearing the public is that we're going to a business, especially a mortgage, where it's going to become more efficient, whether that's through technology, AI, whether that's through different programs, whether that's through putting pressure on certain people. Is I just think in the next 2, 3, 4, 5 years, you're going to see a tremendous change in our business. That's going to be how you get a loan. That's going to be maybe how they look at credit. That's going to be the cost of a loan and things like that. And so a lot of people don't want to hear this, but there are. What do you really need to pay $100 for credit? There are all these different things, whether it's title, whether it's escrow, whether it's appraisal. Why do we need an appraisal? Like a lot of clients say, Kenny, I'm at a 20% loan to value, a 30% loan to value. Why do I need this appraisal, right? And I get it, guys. It does make sense. It's very, very frustrating because there's times where it's like, can't we just use our brain or common sense? It's like you pull somebody's credit score, they've never missed a payment, they got one little blemish on there, it hurts to score 100 points, they're going to have that particular rate, that particular cost because of that. It's total bullshit. And so hopefully over time we get some brains in this Fannie and Freddie and we get people to start moving the needle with just this. Obviously, Trump just came out the other day saying, hey, we need them to help develop, like we need them to build more housing. How can we do that through Fannie and Freddie? They're gonna try to do whatever they can. And like I said, a lot of lenders, a lot of institutions and things like that will follow suit. And for that Fannie and Freddie can't do, that secondary non-QM market's there to make up that loan product or fill the gap or whatever it may be. So you heard here talk about spreads, right? So that was like spreads coming down the mortgages. So everybody wants to know about interest rates, and you heard they're trying to do everything they can to get interest rates. You heard him say he wants interest rates down. Again, they're not going to get there until we figure out in the next month or two. First step is how's the data going? Second step is who is going to be replacing Jerome Powell? We should know about that, and hopefully by November, the latest. And then we'll start figuring out who is the person who's going to replace Powell. What does that person's mindset look like? Where do we think their head is at? How are they looking at data? Do they think they're going to change how we look at data? And obviously, when they get in office, where do they think rates should be? And ultimately, that's where things are going to go. But outside of that, folks, this guy, Bill Poultry, could come out and cut down LLPAs. If you don't know what that is, look it up. Loan level price adjustments. They could bring those down. There's spreads between the 10-year, 30-year fix with confidence. Those are coming down. There's other things. These people could invent loan products. They could get more, easier with certain things and harder with other things, right? So I think in the next 2, 3, 4 years, we should start seeing a focus on credit scores, a focus on how we get title and escrow done, a focus on how we get appraisals done. Because I can tell you right now, me here sitting in this chair, I'm not waiting for anybody else. I'm actively right over here. Danny and my team is literally, as I shoot this video, she's over here. We have our workflows. We are working with the CRM company, and we are trying to make loans easy as possible. The biggest thing we're using AI right now is going to be the customer service touch point, whether it's external, whether it's internal, or we're making this process. So I am trying to perfect the process where I can keep my overhead lower, my costs lower, so that way the consumer at the end of the day, they can get a more affordable mortgage. That's why I'm here in wholesale, because I know wholesale, we can deliver the best products, the best service, the best pricing, the best rates, all that stuff, because that is the model here, right? And it's proven that we can save money because comparative over anybody else, it's just data. But I'm doing whatever I can in my office, on my team, to be more efficient for scalability and for the future. So anyways, I think right now with AI, with technology, is everybody's really looking to see what they can do. You're going to see this more and more come out of Fannie and Freddie. You're going to see it come more out of credit reports, title, escrow, the lenders, the whole damn thing, appraisal soon with AI and stuff. I hope we can just make it much more faster, much more efficient. And I get it. For those of you that are self-employed, that we do loans, or that have complicated files, it should not be that hard. And there is technology being worked on. I'll just throw out there right now that I'm in talks with people that once you upload your file, it can run through and tell you what you have, not have. So I'm hoping in 6 months or a year from now, I have developed just internally something from start to finish that is just unbelievable as far as how we can get a file in, look over the file, get back to the client, get what we need, and knock it out with efficiency, transparency, and really use a lot of tech and AI to basically move through it. As I always say in this business, and maybe you never heard me say this, but unfortunately, it is the truth. When a human gets involved, I think in any process, it always seems to screw the process up. But in mortgage, always happen. When there's an error, mistake in the end, and you reverse back to where we started, typically it's from human error. When there's a delay, typically it's on human error. So if we can get technology to get in there and help keep things moving along, giving the client updates, giving my team updates, giving agents or third-party updates, and just saying, let's keep this going. You're behind schedule. We need to get those docs in. We need you to follow up. We need you to do X. We need you to do Y. It would really be helpful, because we're in a business where it's constant follow-up. It's a lot of ticky-tack stuff. And just like he said, this ticky-tack stuff has to happen, but it doesn't need to be overly expensive, overly complicated. And with technology, we need to embrace it more and make it more expensive. So anyway, hope this video finds you well. This is not the most sexy topic, but at the end of the day, being more efficient in my business, and that's saving somebody $1,000, $2,000 per transaction, is huge over tens of millions of people that would need to do something, whether it's purchase or refi throughout the year. Of all these transactions, it saves a lot of money, which puts it back into your pocket. And again, if I can help you guys answer any questions, please reach out. And yes, the number one question is, Kenny, rates have come down. Do you think they will continue to come down? Yes, they will. Do you think that it's going to take time? Yes, it will. And look, folks, I wouldn't want rates to drop off a cliff tomorrow to 1.5%. Number one, it's not good. That's not good business. It's not not good for the industry. There's a whole other reason why that is. But trust me, we just want rates to gradually come down. So that way there's enough staff, there's enough support there to support that business line. Whether it's residential or commercial, it's not there yet. So if rates were to fall off a cliff, it's just going to be an unpleasant experience all around until we get caught up, and it's really not fun. So anyways, always thanks for watching, guys. Share this with somebody. Let me know if there's any topics or anything you'd love me to talk about. But anyways, I'm always here to help and answer questions. And whether you want to call me, text me, email me, or stop by and say hello.